Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading, but more specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. In this video, I'm going to show you two examples of trades from this morning that were morning gap trades that worked out picture perfect. But first, let's explain exactly what gap trading is and how it's applied to stocks that are moving early in the morning. As traders, we need opportunity. We have to find the opportunity where stocks that are moving are going to put profit in our pocket. So gap trading is when stocks are gapping higher or lower in the morning, generally from either an earnings announcement or some other related news event. It creates opportunity. And the opportunity for traders is when they can identify a specific price where these stocks will be drawn to like a magnet and then have a price reaction from in the other direction. In my course at LazyGapTrader.com, traders learn everything they need to know in order to trade the gaps successfully. Which stocks does this work the best with? What are the specific criteria that we're looking for? How much volume are we looking for? How much of a gap higher or lower are we looking for the stock to qualify? And most importantly, how do you calculate the specific price level where these stocks will first be drawn to like a magnet and then have that price reaction from in the other direction? The other thing I do is give traders an opportunity to get my gap trade sent to them each and every morning at 9 a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. Here's a copy of today's email. As you can see, it arrived at 9:02 a.m. and that's Eastern Standard Time. So this morning, we had 4 potential gap trades on the board. We only take the trades that have the highest probability of profit, the highest probability of success. If a stock does not hit our specific price level that we've calculated, that traders who have taken the course learn how to calculate on their own, we don't want the trade. It's off the table. It's off the board. However, when a stock does come into the level that we calculate, we know it's a high probability trade. Therefore, the first one that hit our level today was EDU. Gap lower, support levels are $94, $90.48, and $85.75. Stop and profit target is about 40 to 75 cents. These are minimum profit targets. Each of these price levels, the 94, the $90.48, and the third one, these are separate independent trades from one another. A stock can hit the first level, have the type of price reaction we're looking for, put profit in our pocket, and later on in the session, it can come down and hit the second price level, producing another trade. That happens, and we do get multiple trades out of the same stock on several occasions. The second stock that hit its price level today was First Solar, FSLR. Gap higher, resistance levels are $73.60, $74.64, and $76.61. Stop and profit target is about 40 to 75 cents. Again, minimum profit targets. We're on the chart of EDU, and as you can see, the stock closed yesterday at $98.85. The stock was getting a nice haircut at the open, qualifying for one of our morning gap trades. You can see what happened in the second 5-minute candle of the day. Just 10 minutes into the trading session, the stock came in, made a low of $93.75, well within our stop loss limitation, and just minutes later, the stock was already at a high of $95.87, a tremendous bounce of $1.87 off the level identified 30 minutes before the market even opened for business. Just to magnify it a little bit more, I've taken the chart of EDU down to a 1-minute chart so you can see minute by minute exactly what happened. The stock came into the price level in the 6th minute of the day, 9:36 a.m. We made a low of $93.75. 2 minutes later, at 9:38 a.m., we were at a high of $95.87, precisely what we were looking for when the stock came into the $94 level. Keep in mind, any trader that's taken my course at Lazy Gap Trader is able to calculate these specific price levels on their own each and every day. And keep in mind, earnings season is just getting heated up right now, which means that each and every morning we're going to have a lot of stocks moving in both directions, creating the opportunity for profit that traders are looking for. Next, we're going to take a look at a chart of First Solar. And as you can see, the stock actually traded through the first price level up to the second price level. Couple of things happen here. The first one is some traders might have gotten stopped out if they shorted the first level. That happens. We don't win every trade, but what we do win is the large majority of the trades. However, traders that have taken my course and that get my daily gap trades each and every day know that when price levels are close together, it's prudent to take half a position at one level, and if the stock continues higher, we put on the second half of the position. So for example, half position was taken at 73.60 and a second half was put on at 74.64. They're only $1 apart. It's not that big of a deal. But look what happened after it hit the $74.64 level. Pierced through it by just a few pennies, and the stock immediately collapsed for the rest of the morning session, making a low all the way down at $68.53. Doesn't matter what kind of math you use, any way you slice it, that's about a $6 pullback off the level of $74.64. We were shorting the stock when it got up to these levels, expecting a pullback, and we got a $6 pullback off these levels. Another thing that's important to note is, in the course, traders learn how to maximize profit when stocks have these kind of rallies or pullbacks for multiple dollars off the levels that we give out or calculate on our own before the opening bell even rings. There's an entire video module in the course that traders learn how to turn trades like this into risk-free, emotionless trades, which allows them to get the maximum benefit as the stock is headed in our direction. The last thing I'll mention about this strategy is it's important to realize the why behind the reason this works. Once traders understand the why and the reasoning behind why this strategy works, it gives traders an entirely different outlook on their day trading. It gives them an entirely different confidence level when day trading. It takes a lot of the guesswork away from these trades because they have a specific expectation when stocks hit certain levels, certain price levels, and what should happen at those prices. When you remove a lot of the guesswork away from your day trading and you add back in confidence, that's a recipe for success. Look, come over to lazygaptrader.com, check out the course. You can learn everything you need to know in order to trade the gaps successfully. This is a strategy that you can use each and every day for the remainder of your trading career. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.